The ability to simplify means eliminating the unnecessary so that the necessary may speak. Hans Hofmann. My friends, that's why we keep our charts simple. We use the price percent oscillator, the derivative oscillator. We cut through all of the flack, all of the haze, all of the noise to look for price movement, to be able to accurately track that. Now, this is my second time recording the show today. If you listen to the audio podcast, it is different than this one because for some reason I finished the show and it wouldn't let me download the video, but it let me download the audio. I do not know what ghost is in the machine, but we'll hope that the second time, for at least the video portion, is even better than the first. My friends, let's look at these charts and see what we see. Everything down for the day today. The S&P down 1.8%, the NASDAQ 2.26, bonds 1.59, gold 0.38, Bitcoin, depending on what you look at, anywhere between 2 to 3%. Now, how have we ended the week so far on Thursday as we go into Friday? We have a green open box candle, little wick on the bottom, long wick on the top for the S&P, still negative on the price percent oscillator, derivative oscillator losing some downward momentum. So overall, and we like that quote, all things being equal, the market tends to move in the direction of the largest chart. So still a lot of downward pressure on the 2-day. We've seen it move up over the last many days, still negative on the price percent oscillator. The derivative oscillator has gone positive. So that's looking up, but still it is not delivering at this point. Half day, we can see we had a day and a half of up movement and then rolling over. Hasn't crossed going down on the half day. Derivative oscillator still positive, as is the price percent oscillator, but the charts that count, particularly the weekly, still down. We look at the NASDAQ 100. We see even less upward push. We have pretty much a doji right here for the week. That is lots of indecision. Price percent oscillator still heading down. Derivative oscillator losing a little bit of downward momentum. Price sitting right there on the 2-day trend line above that weekly. We look at the 2-day itself. You can see a little green up candle with a wick on top, a little wick on the bottom. Price percent oscillator still negative. Derivative oscillator like the S&P has gone positive. Half day, we can see down in the morning, accelerating further down in the afternoon. Like I said, it's the biggest downer of the two. 2.26% Vice, 1.8% on the S&P. So overall, again, the mood in stocks still negative. Doesn't mean all this has come to an end. Again, it's so interesting if you waste your time watching the news. What you will hear, the only thing that matters, my friends, price movement. Let's look at what's going on with 20-year bonds, down 1.59%, going in the direction of that weekly vertical crossover quite nicely, spiking down on the price percent oscillator, derivative oscillator on that weekly chart. And 3 candles connected, 6 days, we can see a strong down movement accelerating, derivative oscillator and price percent oscillator. And of course, the half day, we saw we had a sideways slide and then down on Thursday morning and afternoon. Derivative oscillator had been losing downward momentum, started gaining more. Price percent oscillator also pushing away from the red signal line. So going in the right direction. Those of you who are in TBF, that is, of course, the inverse fund to TLT, or who are in puts, you're doing quite well in those practice trades. Congratulations. What's gold up to? Down 0.38%. Nice up week, though, trying to continue to push itself up. Derivative oscillator gaining a little momentum. Price percent oscillator heading up. Green up candle there today. Again, nice candle that has formed. Not enough energy, though, to cross over. Derivative oscillator still negative. Price percent oscillator couldn't cross. Half day, we can see where things slowed down, pulled away from the trend line, and then a red spinning top, almost a doji in the afternoon, down 0.38%. Lastly, we go to Bitcoin, and depending on what you look at, whether it is something like the New York Stock Exchange Bitcoin Index, you look at GBTC, which is the grayscale, you look at the futures, you can see the charts look the same pretty much, but depending on where you go and how accurate and how often delivered the pricing is. New York Stock Exchange does it once a day. So the chart works, the prices at the end of the day are not all that accurate. We basically had down moves ranging on GBTC 3.37, and then when you look at the futures, down 1.5 to 1.7% for the day on Bitcoin, but a green up candle for the week. Price percent oscillator heading up, still negative. Derivative oscillator losing downward momentum. 2-day chart, of course, that crossed over going up back on Tuesday the 8th. And of course, we see a nice green up candle for the 9th and 10th as the derivative oscillator gains momentum. Price percent oscillator heads up. But just a 2-day crossover doesn't mean everything has changed. We look at the half day, and you can again see where things have been moving up. But overall, folks, don't forget, just one green up candle doesn't mean all this goes away. We still have lots of downward pressure on the crypto market, so we'll keep our eye on things. Hopefully, this second recording of today's show will work and it will get out to you. Patreon members, we appreciate you. We sent out to you earlier the 20 weekly vertical crossovers. I believe there were 8 going up, 12 going up, 8 down. So enjoy. Find a couple to practice trade tomorrow. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.